Well, the past week was a volatile one for the global markets, but with a slew of economic data, including U.S. inflation for July, the week ahead promises more fluctuation. Here's a deep dive on what to expect from markets this week.
The upcoming week promises to be a roller coaster for global markets, with a multitude of economic indicators and corporate events set to influence investor sentiment. The release of the U.S. Consumer Price Index will undoubtedly be the headline event. Investors will be keenly watching for any signs of cooling inflation, which could influence expectations for the Federal Reserve's monetary policy path. A softer-than-expected print could lead to a risk-on rally, while a persistent upward trend might exacerbate market volatility. Beyond the U.S. central banks and other major economies will also be in focus. Commentary from the European Central Bank and the Bank of England are likely to impact the euro and pound sterling. Additionally, a slew of economic data, including GDP figures, industrial production, and retail sales from various countries, will be closely watched. These indicators will provide insights into the global economic health and could influence investor risk appetite. The earnings season continues to unfold, with several high-profile companies set to report their quarterly results. Investors will be scrutinizing guidance from their companies for clues about future growth prospects and profit margins. Any unexpected earnings misses or downward revisions could trigger sell-offs. Geopolitical tensions remain a persistent source of uncertainty. Trade disputes, geopolitical conflicts, and political instability could escalate, leading to market volatility. Investors will be monitoring developments closely for any potential impact on global economic growth and supply chains. In summary, the upcoming week is poised to be a period of heightened volatility. The interplay of inflation data, central bank decisions, corporate earnings, and geopolitical risks will create a dynamic market environment. Bureau Report, WION, World is One.
And well, for more on this, we're now being joined by Andrew Holland. He's the CEO of Avenues Capital, and he's joining us live from Mumbai. Welcome to World Business Watch, Mr. Holland.
Good morning.
Good morning, Chair. First, I'll be asking you that do you think that the US CPI data for July will show any signs of inflation cooling?
Listen, I think on inflation, you're going to have those months where you see a little bit of an uptick, and then the next month it gets revised and it's slightly lower. So I think inflation is important in terms of the trend, and the trend is definitely heading down. But you're bound to have some blips along the way. I think what the market told us last week is the jobs data, which is more prevalent to them in terms of where the economy is heading. So the inflation will give you, yes, it's on target, it's taking time, but the jobs data will give you the indication of how much will the Federal Reserve decrease rates. Will it be 25 basis points or 50 basis points? And I think that's the key from the inflation figure is if the trend's going in terms of it's going in the right direction, in terms of going lower, we could have that 50 basis points cut. If it's higher, then it might more be like 25 basis points.
Right. I want to just take that point further. That does the Fed perhaps have room to cut rates by 50 basis points in September?
No, it certainly has the ability to do that. The question is, if they do it when the data say, just going in the normal direction of what they've been explaining over the last, 1 year or so, then, the market's going to question, is the economy slowing a lot faster than the data is showing, or is that what the Fed's worried about? So it's a very fine line. I think the problem for the Federal Reserve is that, they got the data wrong on the way up in terms of inflation and was slow to increase interest rates. And the worry for the market is that they'll be slow to decrease interest rates or reduce interest rates on the way down. And I think that's the key battle at the moment for the market.
You do speak of the problems that the Fed faces. Just to follow up on that, will persistent inflation force the Fed to hold off rate cuts?
No, I think that the indications of what I can see and where the inflation is, even if you have a slight tick up in inflation, I think 25 basis points in September is very doable for the Federal Reserve without unleashing too much liquidity and therefore pushing up inflation.
Last question to you, Mr. Holland. What impact do you think the US CPI data will have on markets this week?
I think it'll be very muted. I'm not really thinking that the inflation data is going to have a big impact. It's the jobs data I think everyone's focused in on now.
Right. Thank you, Mr. Holland, for joining us on World Business Watch with your insights.
My pleasure. Thank you.